this market's got a lot of winners that feel like they came out of nowhere, don't they? I mean, stocks are always checking, trying to figure out what they are. I mean, last night I talked about IMAX. Well, it's making a fortune because it's the best way for struggling movie theaters to sell tickets. Today I got another one for you, just kind of popped out of nowhere on my screen. Cheesecake Factory. Yeah, it's up over 31% year to date, trouncing the 6.5% gain in the S&P 500 over the same period. Cheesecake Factory. So once again, I'm asking, what the heck is going on here? It's not obvious that Cheesecake Factory would be clean up right now, is it? They have 350 locations across the U.S. and Canada, anchored by their flagship brand, of which there are 215, although they've got a bunch of others, like a North Italia, an upscale Italian chain, Flower Child, fast casual chain where everything is locally sourced, all natural, made from scratch, and the Fox restaurant concept, which is more of an innovation lab for new brands. So what's the secret sauce that's driving this thing? Whether you're a regular customer or not, Cheesecake Factory is it's infamous for one thing. It's ridiculously large menu. It's over 20 pages long, roughly 225 different items at any given time. Of course, when you take away the roughly 45 different cheesecakes and other desserts, it's slightly more manageable. But they've still got a sprawling lineup of foods. You can't get enough of those avocado egg rolls. Basically, Cheesecake Factory covers all the bases, making it a good choice when you're looking to go out with a group of friends. This is quite literally the safest option because nobody's such a picky eater that they can't find something to order here. As analysts at Goldman Sachs put it, this diverse menu eliminates the, quote, no vote when deciding where to go out to eat. Plus, with its wide variety of price points ranging from $12.95 for a cheese flatbread to $31 for steak frites, there's a value here for everybody. That's crucial in this environment. Throw in Cheesecake Factory's massive portions that have you leaving with leftovers, plenty of leftovers. And the value proposition here is clear. If there's one thing the winners in the restaurant space have in common right now, it's that they offer a great value proposition. I mean, given the size of the stuff, it's almost like you get 2 meals in one, provided you use the doggy bag, which is what my father's business was. And look, even if you're not a fan, it's hard to argue with Cheesecake Factory's annualized unit volume of $12.5 million. And that's what they make per share, and it's an obscenely large number for the restaurant industry. Everyone does marvel at these guys' profitability. High average unit volumes are great, but converting them to higher profits is even better. Luckily, management's been focused on doing just that by investing in their workforce with the goal of making the Cheesecake Factory a better place to work in order to retain talent. On the last conference call, management proudly shared that they once again been named to Fortune magazine's 100 best places to work for the 12th consecutive year. They got the same strategy as Costco. It's only cheaper to pay your people well because hiring new employees and then spending months to train them is a huge waste of money and really hurts the profits. At the same time, if you consistently retain your best people, that's generally good for the numbers. As management explained on the last conference call, recent operational performance and notable results were driven by our talented team and our ongoing focus on staffing and retention. Management went on to say, quote, during the first quarter, we saw further improvement in our already industry-leading manager and staff retention, which we believe directly contributes to outstanding guest experiences, overall restaurant performance, and ultimately sales growth. And in fact, first quarter guest satisfaction scores improved both sequentially and year over year, end quote. Hey, look, it's hard to argue with those results. The customer's always right. I'm calling this the Costco philosophy, but this is also very much what we heard from Kevin Hochman. He's the CEO of Brinker, parent company of Chili's, when he was executing his big turnaround. And look, Cheesecake Factory hasn't just been relying on improved service to jumpstart this recent rally. The company's also been making changes to the menu, something they usually do to keep things fresh, just in case you were sick of the 225 items already. Part of this, the main reason, really, that these semi-annual menu changes help the company is they stay on top of any hot food trends. As one J.P. Morgan analyst astutely noted on the last conference call, citing his hard-hitting research of going to the restaurants and trying to all the new items, much of these new dishes are very vegetable-heavy. That's smart. I can confirm that this analyst is right, although here at Mad Money, we use the more cost-effective method of looking up the changes online. Jamie Dimon might have to revoke that analyst company's card. But it's true, they added a ton of vegetable dishes, giving you a few more ways to avoid that no vote from your more health-conscious friends or my vegan daughter. At the same time, Cheesecake Factory's also changed the menu to offer their customers better value, something that they're planning to stick with going forward. The result, when Cheesecake Factory reported its most recent quarter at the beginning of May, they delivered impressive unit-level margins of 16.6%. Wall Street was only looking for 15.8%. Meanwhile, they're planning to open 25 new locations that are in growth mode this year across all their brands, although only 3 or 4 of these will be Cheesecake Factories, which isn't much given that they currently have 15. The other concepts are doing the heavy lifting. Management expects to open 6 to 7 of these North Italia locations, 6 to 7 at Flower Child location, and as many as 8 to 9 FRC restaurants. Of these other concepts, they're no joke either. North Italia's unit volume is 7.75 million, Flower Child's 4.6 million. So adding new locations will be meaningful to the overall earnings. This comes out to 7% unit growth overall, which is enough to make this a pretty compelling restaurant growth story. So I like the company. But where do I come down the stock right now? This thing has been red hot. Although with Cheesecake Factory set to report earnings the Tuesday after next, it might be wise just to wait and see the latest results. While performance has been strong, management's remained conservative in its outlook, so the stock might sell off even if they have a real good quarter. Despite delivering a top and bottom line beat and these impressive margins when they last reported, the stock slipped the day after earnings thanks to management's commentary that, quote, the environment doesn't feel as robust as maybe 3 months ago, end quote, with their second quarter revenue outlook coming in below consensus expectations. So let me give you the bottom line on Cheesecake. Even though management's been pretty conservative in their outlook throughout this rally, I don't know if it would be prudent for me to tell you to buy Cheesecake Factory ahead of the quarter, given the stock's rallied 30% since those comments about deteriorating environment. And it's done so on very little news. There's a lot to like about this story, but let's see how they did last quarter. As much as I want to say let them eat cake, maybe let this one cool off before you take a bite. Let them eat cake. You think I didn't do this whole thing so I could do that? I just wanted to say let them eat cake. Okay, let's go to Larry in Florida. Larry.
Hey, Jim.
Larry.
So I'm studying for the bar down here, and I've been eating a lot of pizza. I just wanted to know what your thoughts were on Papa John's.
Okay, I'm into fitness. Fitness pizza in my mouth. I love Papa John's. It's fantastic. And I think that, look, here's the thing. The only problem with Papa John's is they changed management. The really great guy went over to, from Papa John's, he went over to, to the company, the Shake Shack. Went to Shake Shack. And you got Todd Penegor there. And Todd, he's a really good guy, but he was at Wendy's before. And I have watched what Shake Shack has done since. And I think that Shake Shack got the better end of the deal. It's been really fabulous since Rob Lynch moved over there. So I'm going to have to say we have to wait and see. I like the pizza, though, very much. But I need to see how Todd does there. He's new. And that I couldn't think of Shake Shack immediately. That's just, I think I got it. I had Danny Meyer on my brain. Let's go to Greg in New Jersey, please. Greg.
Booyah, Jim. Greg again.
Hey, man, what's up?
All right, all good. Maybe a little unfortunate, but I'm calling about the maker of the Baconator. I know that there's a new CEO in town. The old one left. Maybe you could give me a little news on Wendy.
I'm not. Look, other than the fact that my wife loves Wendy so much, it's just ridiculous. I'm not liking this stock. I mean, they cut the dividend, and already the dividend now is 5%. There's something very wrong at Wendy's, and the answer is you do not want to touch it. That happens to be a very tough industry, the burger industry. You want to stay away from Wendy's. All right, there's a lot to like about the stock of the Cheesecake Factory right now, but I'd wait a month or so before taking any action. I want to see that quarter. Now, much more Mad Money ahead, including my exclusive regional financial player, First Horizon, has been so good all this time. Then there's prevailing so-called wisdom on Wall Street that's been bugging me today. I'm taking another look at the stock of one big bank, and I'm going to tell you why I think the broader sentiment is just plain wrong. Of course, all your calls about fire tonight's edition of the Lightning Round. So stay with Kramer.